still 11.5 trillion rupees of cash is available in the market. It's in the hand of the people. If we can bring that cash, 20%, 30% of that cash back to the banking system, that is going to improve the overall liquidity in the system and enable the banks to lend more to the real sector, including the SMEs and the agriculture. So that is an area that will be addressed to all these initiatives, including the merchant onboarding and the digitization of the supply chain and these open banking initiatives. Because if we are able to make things simpler and convenient for the people, and as well as cost effective for the people, cost effectiveness is also critically important. If we are expecting the consumers and the merchants that they will be paying the cost for digitization, they will be hesitant with it. So the cost will have to be comparable with cash. So this is our vision and this is our goal as well, that we will be making the digital payments as conducive, as ubiquitous, and as cost effective as the cash is. People don't realize the full cost of cash. There's a huge cost associated because you have to manage it, you have to save it somewhere, you have to visit your bank for the purpose of depositing it or having some safekeeping arrangements. We must collaborate. The information is available with certain institutions, and we must collaborate so that information could be leveraged. Because the ultimate goal is to increase the pie, to increase the financing. If some of the institutions would be having that information and that data just available with them, so then it's not serving the purpose. So that is the very objective of promoting all this open banking even as well. So there are fintechs, and then there's some data is available with the banks as well. So that collaboration is, I believe, it's critically important. We'll have to make things simpler and convenient for the consumers. And in open banking, this objective could be achieved. So again, the emphasis is that let's collaborate. And let's make, and that will help everybody because it will increase the pie. What we see that our banking system is, the size of our banking system is one of the lowest in the region as well as in the globe. So with these collaborations and with the use of these platforms, we strongly believe the size will be increased. Still, women inclusion is a challenge, let me admit this. We have covered a lot of distance, but still, only 52% of the adult female are having bank accounts, as compared to 82% of the adult male population. Still, there is a gap of 30 percentage points. So that gap, we have plans in our financial inclusion strategy that we have given, that inshallah this gap will be reduced to 25% by 2028. So one area that it is the use of technology and all these tools that are available, including AI, so that we could see that how can we reach out to more and more women. The other aspect is the financial literacy aspect. And in the financial literacy aspect as well, we are focusing and targeting on this women, so that we should be able to reach out to these, to learn more and more women and provide them the financial literacy. And for that purpose, we are also collaborating with various stakeholders, including microfinance institutions and microfinance banks, various NGOs. We tried to make the environment as conducive for the banks and financial institutions as possible. And for that purpose, one area that we saw that there was an issue of the higher risk associated with these lending. So we came up with that risk coverage facility. And that risk coverage facility gave that comfort to the banks that the coverage is available. We had reviewed the 15 years data of NPLs, and the average default rate on the small enterprise space was around 14%. So we gave the coverage of 20%. to the banks. And similarly, on the medium enterprise space, it was 7 to 8%, and we gave the coverage of 10%. So that played an impact. Then the focus was on the digital side, so that more and more SMEs having the cash flow visibility available. So we have achieved some progress in that space, but still a lot needs to be done. The third important, which is to me the first and foremost, is ensuring the conducive regulatory environment as well. And you would be pleased to know that we have developed the revised SME PRs. The focus in that on these PRs again, that make them principle based. Focus is again that we should be able to ensure that it makes a business sense for the banks, and it reduces the information asymmetries. It encourages the usage of the technology and the digital platform. So that's how we are approaching it. There is an extensive engagement with the banks, so that wherever we see that there are still the inertia and the capacity issues, that capacity should be addressed. And then at the same time, we are collaborating with the other stakeholders like SMEDA and other players and the private players in the private sector, so that the overall bankability of the SMEs could be improved. We are encouraging partnerships between banks and the fintechs as well, so that that platform could also be used for the purpose of bridging the information gaps that are available. So we are positive, inshallah, with these conducive regulatory environment, with the risk coverage, with the overall thrust. And luckily, there is an improvement in the interest rate environment over the years as well. Starting, we were about 22% year and a half back. We are at 11% at the moment. So that also has helped us in improving the overall viability of the financing to the SMEs. We have also came up with an innovative operational subsidy. It's a smart subsidy, and it is associated with the outreach levels. If a bank is having net increase in its number of borrowers, so that bank will get a subsidy of 10,000 rupees per borrower. So again, making it more viable for them, and then requiring them that they must have that those products, those systems, the HR, the network that is needed to provide the agriculture financing. We have also allowed the banks that if they see that there is a need for collaboration with certain other entities, collaboration with microfinance banks, with microfinance institutions, with other NGOs, they collaborate. Through that collaborative effort, the overall financing needs of the sector could be met. On top of that, we have come up with the end-to-end agriculture digital product for the smaller farmers, and that's a collateral-free product. There's no collateral that is needed for that product, and that is that a portal has been developed. It is being housed at the PBA level, and the merchants would be able to digitally give their credentials, their particulars with respect to the farming activity that they are undertaking, and based on that, there will be screening, NADRA screening, and then some other screening checks. And once those screenings are done, then there is a linkage with the land information management system. So that land information management system will be giving all the information about that particular farm on which the financing is to be needed. So that is available. All the information about the borrower that has been made available by the borrower, and then information available in CIB and other data points. Based on that, the banks will be running their respective credit scoring models, and then they would be deciding that whether that farmer is to be provided funding. The beauty of this digital product are two. Three. One, it is totally digital. Two, 75% of the funding will be provided in kind. For that purpose, the banks have collaborated and onboarded thousands of vendors, agri-vendors, which are dealing in the inputs, the seeds, fertilizers, and the pesticides, and all other agri inputs. Why we did this? Two reasons. First and foremost reason, that the smaller farmer is not having access to the quality inputs. And when it is they are having the excess, the cost is very high. So we are trying to achieve this very objective that the farmer is having access to the quality inputs at the competitive prices, because the banks have onboarded them. There are price tags available as well that have been agreed, and as the bank approves that limit, the limit is transferred in the wallet of that client, and that wallet is usable to the extent of 75%. 75% can only be used in those approved vendors which are available in the vicinity of the farmer. 25% can be taken in the form of cash, because other expenses like wages and the associated expenses which cannot be in the form of these inputs. These farmers will also be getting advisory services. We believe that will result in increasing the productivity of the farmer. And if we are increasing the farmer's productivity, which is one of the structural issues in our economy, that the productivity is very low. So when we would be increasing the productivity of the farmers, so that will improve the farmers' income levels.